afternoon. Ira Epstein of Linn and Associates with your afternoon Spider ETF video for this Tuesday, the 12th of May 2020. Had my eye operation yesterday. I can actually see numbers, which is very, very different. And this is the first day. It's going to take several days for the swelling and all to go down, but I feel a lot better, and this is better than when I did the first eye, that's for sure. But getting to the markets, we're at a juncture right now where if you go outside, you're seeing cars on the road. I know that my wife got called into where she works for a day of work today. That's highly unusual. She's a jeweler, by the way. She's been there for 3 decades. And to make a long story short, they're doing curbside delivery, but their phones are ringing off the wall. So that's very good. When we look at what's going on with gasoline demand, we know it's picked up. We're seeing that the EIA has already come out with energy reports where they're looking for it to get back up to it's staying under $2 in America this year for gasoline. I'm talking regular grade, and that's the average price, but staying well bid as long as shale doesn't come roaring back and as long as OPEC holds on to its supply cuts. So that is a good sign. Now, the question that I've had all the way through is, well, everybody's tech crazy. How many things you're going to buy? How many Netflix you're going to buy? And how many subscriptions are going to fall off in some of these areas as people start returning to work? And I'm not hearing anything said about that on TV, but it is something we have to think about. I would assume that, come end of June, most states will have lifted their quarantines on all kinds of things, as long as COVID-19 doesn't come racing back. Comes racing back, folks, different game. But I wonder just how many subscriptions will cancel. I heard a fact today that we should look at too. They were saying that cable, now I'm talking cables from your computer, people bought 459% more than they typically do. And that was last month. So I'm just wondering to myself, how much is forward bought on different things? That isn't to say tech's not going to do better, that artificial intelligence, that a certain amount of people are going to work home forever that weren't going to work home before. I get that. But is the market getting a little ahead of itself? That could be. In the technology sector, is the market going to fill the gap right here or not? I think that's the whole question that has to be answered. If not, that stays in place and you can get breaks and you can start getting corrections in the market. The trend is certainly still up. When you look at a swing line, you still have the pattern of higher lows, higher highs. 88.08 is still the last break low. When I look at where support is, it comes in at the combination of the 18-day average and the 100, 90.24 to 90.23. I got to tell you something. I'm reading that real easy. Whoa, that's great. When I look at the Bollinger Band, we have been running the band to the upside. Now, remember what the Bollinger Band theory is. The market will trade within the band 95% of the time. When it locks in, and that's when every day practically it's hitting the band. It gets over, it gets under, but it's every day. That's called locked in. It's often accompanied when you get momentum that is embedded. Embedded means that the two numbers that make up the slow stochastic reading are both over 80. Until one of them, and it's typically the K line, the red, closes under 80, the trend is said to be up. If it loses that reading, and especially if it doesn't get it back the day after it loses it, and I mean right away the next day, it puts into play the 18-day average of closes. So, will the market go back there is a possibility, depending if you lose this reading. And if the market were to break without losing it, and the word is without losing it, I don't know if it can do that. It's about $3 away, and the way these stochastics work, I'm not sure. But if it did not lose it and it broke there, I would assume the bulls will buy it with both hands. If you lose the reading and you get there, no, I don't think they will buy it with both hands, because when you lose the reading, the market instantly becomes overbought. Then it's got to work off its overbought condition for the next round of whatever's going to happen. When we come to the SMH, which replicates the U.S. Semiconductor 25 index, you're overbought. You had gotten there, starting to pull back. So a little different than we saw in XLK. The second thing this market has done is this arrow is actually in the wrong place. I should be having these arrows, and I'm looking at it right now, pointing which way? Down. Lower highs, lower lows. I didn't see that. I don't know how I missed it, really. New eyes, I guess. The bias is up since you're over the 18-day average, but the swing line is turned down. Sometimes from outside days down, you start putting in trade tops. If you take out today's high on Wednesday or Thursday, you normally then make a run to the closest moving average above the market or Bollinger Band. It's not that far away. It'd be 138.89, about $1 higher than today's high. When I look at the XLI, this one I did right, higher high, lower low, no trend. You're just drifting on this 18-day average. I call the 18-day average of closes the line in the sand because it's from that number trade setups happen. But more even important than that, this market's caught in a pipe. Do you see how the market has just been going sideways? And before I missed yesterday, I told you that think of it this as a bottle that melted on a stove. And this melting part, you're just stuck in there. And you get sometimes false moves out of that. You'll try to break out to the upside, the downside, and you don't seem to come out of the pipe. That's what I think you're in right now. In the energy sector, not quite the same. You can see the slope is up. The trend has been up, higher lows, but all of a sudden we started making lower highs. So the market's gone into a stall, and at the same time, you can see momentum is trying to do what? Momentum is trying to roll to the downside. It never did embed. So can we get back to this 18-day average blindfolded if the market wants to go there to regroup? If the market's going to go up, the problem is if you buy the market as it breaks out, it's already in overbought territory. Where are you going with it? I guess the upper Bollinger Band, but I don't think the smart money's going to jump on it. QQQ had been running that upper Bollinger Band, and with today's close, you're getting perilously close to losing the embedded reading. If it's lost, I will look for prices to retreat to the 18-day average of closes at 216.31. We had our first outside day down. We'd been hitting that Bollinger Band each day, but you're liable to turn that on the opening tomorrow. And if it turns on the opening tomorrow, you'll see it right away. I would get defensive, and I am defensive if that happens, trying to figure out how you protect yourself. That's up to you. Are you comfortable with the market going back there? Then don't be defensive at all. But otherwise, you're looking for a give up. Possibly, and the word is possibly, I don't know, to that 18-day average of closes if that gives ground to the 100. I'm not seeing a complete turnaround and all of a sudden this market's bearish. In the emerging market, EFA, you've had a pattern of higher and low, higher high. You haven't gone anywhere and you're stuck in this pipe, as I like to describe it. I think you see that crystal clear. And as I've told you, when you get into those pipes, don't trust the trading. Don't assume, it's a buy here, it's going to the upper Bollinger Band, it'll come down. It's full of tricks. And that's because everybody's looking for a direction to break it out of that pipe, and it hasn't done it. Going home, yeah, the trend is up, the bias is still up, momentum on the verge of what? Turning down. You still have the you have the K line over the, no you don't, I take that back, it's 54.57 and 55.41. Momentum is turned down on you. So momentum down, outside day down, 18-day average in play, but the trend's still up. You'd have to take out 55.06 to not have the trend up, and that would not turn it into a downtrend because the best you could get is a higher high, lower low scenario. In GLD, the battleground's very clear. It's been the 18-day average of closes. Should the market take out 158.89, look for support at 157.78. Should the market close over 160.49 and not take out 158.89, the potential is to get back up to the upper Bollinger Band. It is really just sort of drifting here sideways, not moving one way or the other. Now, the gold miners have given a major warning. You had an embedded reading that's been lost. Lost embedded readings often result in markets returning back to the 18-day average of closes, so I am looking for 33.24 to be hit again, and I'll look for that. And if you close under 33.24, you'd actually get a sell signal in the market that could say maybe you're getting down to this number again. But this is an ugly signal. If we take a look at the market yesterday, you lost that signal. It allowed on the bounce today to a degree for traders to come out a little better if you didn't come out yesterday, but you cannot regain the embedded reading now. I'm looking for the 18-day average. TLT, which is the interest rate, the 20-year plus, trend is down. You've hit the Bollinger Band. You hit it actually the first time here, and that is where I think the pros came out. I don't think they're doing anything. I think you're too oversold in a downtrend that is still very much in the sideways pattern, and it hasn't been able to push on that pattern to the downside. In the FXE, which is the makeup of the euro currency, what's the pattern? Lower highs, but higher lows. The settlement today at 102.49 is underneath 102.55, the 18-day average of closes. The legacy has been the lower highs, but it went neutral on you today because of the higher low. To get the downtrend going again, you've got to get under 102.07. But if you do that, you're already oversold with readings in the 20s. I don't see a makeup there. So let's talk if the market wants to go up. Take out 102.75 with momentum oversold and trying to turn up. That could be the trigger for traders to step in at 102.76, looking to see if they can drive the market higher to the upper Bollinger Band. You put it together, you come up with the game plan. And basically, that's what I try to do. You know, in the afternoon, shortly after the markets stop trading in the and I'm talking right after 3 o'clock, I start putting out an update because the update is for the next morning's trade. That is what it's all about. I've now got what the charts have done. I'm looking to see if the market can do something. So you receive the trade ideas from me at that point. Now, a lot of my traders also take my morning subscriber video for futures. And why? Because as you already know, so many of the SPDR ETFs are looking at what the futures do, especially ETFs. You know, a lot of the SPDRs are built within the different sectors that make up the stock market. But when you're looking at DIA and these others, you know that this is made up of what? That is made up of what the stock indices are. When you look at the metal markets, the futures markets, wherever they're at, it's going to dictate where that market is. What about the currencies? Same thing. You think that the natural gas and the other energies aren't making this up? Come on, they are. And you know I added UNG to it. So it's really the SPDRs, the individual sectors that don't. They're going to trade a little different, but everything else is looking at the futures markets. So by me putting out one set in the afternoon, you get your setup. Then you're seeing, hey, what he said there still fits because the futures are doing such and such. That's the game plan. So one set of my recordings I've set at about 5:40 in the morning a.m. Record it, get it posted for the traders. The other comes out at after 3 o'clock for these traders. The cost? Very inexpensive. $8.95 for the first 30 days for the SPDR ETF video. After that, if you want to stay with it, $16. You can get it by calling us at 866-973-2077 or go to our website. That's the best way to do it. www.iraepstein.com under the word research. It's right there. You could be taken there if you're watching me on this right now. Click right here. It'll take you right where you have to go. I'm Ira Epstein. Glad to be back. I'll see you tomorrow.